Hello, good afternoon. This video, I'll be analyzing the Euro USD using the 4 hours and the daily time frame. I will be using showing you a simple strategy which I have tested over time, and I believe is very good, and you can use it to do your swing trading for the week. If you should get it right, you practice it over time. If you get it right, you can use this strategy for swing trading. You can hold the trade for weeks, and you can also hold short-term trades as well by going down to lower time frames. Like this is the H4. This is the daily time frame. I'll go to the daily time frame. Now this is daily time frame as well. So I want to use the H4 because I like using the H4 to analyze the market. The H4 and the daily time frame, they are almost kind of similar. You can see in the daily time frame, it looks like the market is an uptrend, but in the 4 hours time frame, the market is showing a downtrend. So look at it here, downtrend. So if we are going to use this as a swing trade, you have to use a higher time frame. If you're going to use it as a scalping strategy, you have to use a shorter time frame, maybe say 15 minutes, 30 minutes, and 1 hour. But I will be using the 4 hours and daily time frame for this strategy. Now, this strategy is simply called 1-2-3 system. Let me just write it down. 1-2-3 trading system. Let me make it a little bit bolder, bigger. Yeah, let's change the color to blue. Yeah, okay, that's the system. That's the name of the system we're using. Okay, so oh, this is what I'm using to the 1-2-3 trading system. And how does it work? Simple as it is, name calls 1-2-3. Now you identify the number 1 point, which is the existing trend. It's more or less a trend reversal system. It's a trend reversal system, trend reversal strategy, sorry, trend reversal strategy. The trend reversal strategy, the 1-2-3 system. Okay, so what I mean by trend reversal strategy is the market has to be kind of moving in a particular direction, either uptrend or downtrend, and we are hoping to catch the market when it turns this direction to another uh, another direction. So that is how it works. So let me use in this strategy. I would like to use I will not be using the candlestick charting pattern because uh, it's not going to be so easy to spot, but you can still use it as well. But the main thing is to understand the concept. So I'll just show you I'll just briefly explain to you how it works, and I will show you on the chart how you can spot it as well. Okay, now let's pick up this tool here. This is a path tool. Let me show what it means. This is you draw point. It's your point 1. This should be your point 2, and this is your point 3. This is how it works. Now in this strategy, now how it works is that you identify Let's not put it under here so everything will be okay. Or let's move it down here so I will clearly see what I'm doing. Wish I could use a whiteboard. Okay, since it's this is totally the trend reversal strategy. Let's put it that way. Now, how does it work now? Now we've drawn this trend. This is assumed to be an uptrend. You can see this is assumed to be an uptrend, which is assumed to be an uptrend. Assumed to be an uptrend. So it gets to this point. This point now is where we call the number one position. This is number one. This point one. Point one. Yeah. This is point one. Now this is point two. Point two. This is point three. Sorry, you can see that I had to draw that down because the point three has to go below the point one, which is the highest. It has to be a lower low, not as high as this. This is a lower high. This is a high. It has to be a lower high. Sorry. This one market moves up. First of all, this is an uptrend. Step one is uptrend. Like we can use, we call it what we call overbought and oversold. But actually, there's no, in the real sense, there's nothing like overbought and because market can buy and buy for weeks and sell for weeks in the overbought and oversold zones. But let's assume it's overbought. Now the market is uptrend. It has made a pullback. This is called a pullback or a trough. Made a pullback. This point two. The pullback moves ahead again to point three. The market made a pullback, but it never got back to the previous high, which is here. But there's a high. At this point, the market has made a pullback here. Then the market, you notice that the market starts coming down. Understand? The market starts coming down. Let's pick up a two from here. It starts coming a little bit down here. Now the market has started coming a little bit down. This is the point that's coming out a little bit down. Once the market has made this high and it has started coming down, now this is your point of entry. This point two is the point of entry. Now, why do we mean point of entry is that when the market, this is market as an uptrend, point one, comes down, point two, goes up to point three. Now the market is making another trip downwards. This trip downwards, if it closes below the point two, this is a trigger. So you take your trade, your sell trade here. Sorry, let me do that. This is a short position. You take a short position at this point. It should be your bull short at this point for an uptrend. Understand? So this is an uptrend. Market is moving nicely up. Pulls back clearly. Moves up the third time, but doesn't get up. If it goes up to this point, which is the point one, it becomes invalid. This strategy becomes invalid. But if it doesn't get up to this point, well, it has to move reasonably above the point two, reasonably above it, then starts coming down. Understand? If it comes down, it doesn't break this point two, the previous line of point two, is still invalid. If it gets to this point and starts going back up, it's invalid. It has to clearly break the low. So once you spot this, and then you see the market is beginning to come down a little bit, you just draw this line already. This black line, you draw this horizontal ray already, so that you monitor. Then you can set your pending order at this point, whereby when the market breaks up your trade and take you downwards. So that's why I said it's a swing trading position. It's not like a scalp. If you're using it to scalp, market can break in here, break back up, break it. But if it's on a healthy 4-hour candle, what I mean by breakdown is a healthy candle, not a small candle. So if the candle is healthy enough, breaks beyond this thing, breaks beyond the breaks beyond the previous point, which is number 2 points, then you can sell for a long time. The market will be selling mostly throughout the week. You can sell for 2 weeks, 3 weeks, but for the whole week the market will be a sell market. That's why it's a trend reverse. So if you spot this on a daily candle, daily chart, or 4 hours chart, that's perfect. If you also use it to, you can spot it on this 4 hours and daily candle charts. Then you use your what's it called, your 15 minutes time frame, applying your overbought and oversold region to enter and scalp. You can buy and sell at the same point. When the market moves, it doesn't move in one way. If it moves, it will also kind of retrace, but it will not go back be above this line again. When the market breaks clearly, it doesn't go, it might retrace a little bit, comes back, retrace, comes back, retrace, comes back, but it will not go above this line if spotted on a daily candle. That's what I'm trying to say, or 4 hours. So all those movements up, down, around here, you can use your 15 minutes time frame to scalp them using your indicators, which is you can use your stochastic, you can use your RSI, any of them you can use it. So that is how it is. That's for an uptrend. Then for a downtrend, you spot it this way. It's almost the same thing. It comes from, like, markets are not, the market is coming from up the way up to the down. This is point 1, goes up a bit, point 2. No, I have to take this off. There's a mistake here. There's a mistake. I have to take this off. Let me do it here. This for an uptrend. Let me show you that. Sell signal. Found in an uptrend. This sell signal found in an uptrend. Then let's show you that of the downtrend. That of the downtrend. This is sell signal. This is for sell position. You sell at this point. Let's go to the, now for a downtrend, you're trying to buy at the down for a downtrend, while for an uptrend you're trying to sell. So it's a trend reversal strategy, as I said. So market is coming down. First of all, this is point 1. Market goes up a bit. It might, this downtrend has to be a healthy downtrend, like it has been moving for some time. The market goes up. This is point 2. Sorry, let me do that again. Let's do that again. Market is coming from somewhere here. This is point 1. Market goes up here, point 2. Comes to this place, point 3. And that is it. That's point 3. So let's label our points. This is point 1. This is point 1. 1. Point 2, and this is point 3. Remember, the point 3 has to be a higher low for a downtrend. It has to be a higher low. It's point 3. It has to be a higher low. Yeah, this is point 3. Yeah. Now the market is what we call a downtrend. You can see the downtrend. Now this is a buy signal. So where do you buy from now? know that we always mark the point 2. Let's go and mark our point 2. This is the horizontal ray from point 2. This is our trigger point. So if the market goes from point 3, market starts going back up and goes above this. This is our entry point. So this becomes a buy signal. It's a long position. This is our entry point here. It's a buy signal. You can see on the H4, this is like 100 and something, 102 pips. Already here is also 102 pips on the H4. So this is just giving an illustration of what it is. So now how do we do this? This is a buy signal. Buy signal found in a downtrend. So this is a buy signal found in a downtrend. This is sell signal found in an uptrend. That's how it simply works. Now, let's recap again. First of all, there has to be a trend, which is this is an uptrend. So this is the trend. Then the market retraces up down to point 2, goes up a bit, but not up to the previous high. This is a lower high, 0.3. That's it, it's set down. Once it's one for you to confirm that it said is when this 0.3 starts, not when it's still going high, when it makes a turn, starts coming back. You know, when it starts coming back, maybe somewhere around here, you see that it has not gotten to this 0.2. Fine and good. You take off your 0.2, you take off, you draw the line. When it gets to 0.2, breaks above it, below it, then you take a sell. Write your sell. It's at the same thing here. It has to be a downtrend, healthy downtrend that goes up, retraces up, comes back a bit. So this is making a one, that's what we call it, one move, two move, the third move. That's why it's called the 1 to 3 trading system. So when it does this move completely, then we'll wait for it here. The market might not get it. The market might go all the way down. Once it goes all the way down like this, it becomes invalid. It becomes invalid. Invalid. It becomes invalid if it goes all the way down. If it goes beyond this point here, market goes like somewhere here beyond this point, invalid. If it goes here, buy signal. If it goes below here, invalid. That's how it works. So this is a buy signal, yes, it's an invalid signal. So same with this one as well. If it goes above this, invalid. Goes above this is invalid. If it goes above this is invalid. I can't draw them because it's a classic for that one. That's how it works. So this is just how this just is like the theory behind the strategy. Goes up, buy, look for a sell. When the market is a bullish market, you look for a sell signal. When the market is a bearish market, look for a buy signal. That's a trend reversal strategy. So that's strategy. Let's go to the charts and see if we can find anything. Let me go to GBP USD. Let's leave this place. GBP USD. Okay, this is GBP USD now. Okay. Let me remove every drawing I have here. Now what I want to do on this video is I want to use a line chart. I think the line chart is easier for us to cut than candlestick chart. So I'll change my chart here to a line chart. This is a line chart. Now zoom in a little bit and see if we can find strategy that will just discover. Okay, now starting from here, let's see, this is the 4th of the 13th of July. Now we can notice that market was a trending market here. It was buying for some time. You can see the market was buying for some time. It was buying for some time. Yeah, that's a clear buy for some time. Okay, now market has been buying for some time, and you can see the market made some retracement backward, right? So the retracement that it made resulted towards a sell. So let's look at it this way now. Let's identify it now. I made it. Let's use the 123 that we use. Okay, let's pick it up here. Okay, let's use our path. Okay, this is starting from anywhere, but this is just a high. So just give it start from here and draw, no problem. But no, I started from somewhere. Let's be very clearly. Let's very very clearly now. Okay, let's start from here. So you see here was the previous one. Let's start from here. This is our point one. It's our point two. It's our point three. Let's label it. This is point one. Number one spot. Remember that very clearly. Number one. So number one. Now this is two. Hope you're following. I believe you're following. No worry, it's just how you have to practice it. This is the third spot, which is your last leg of the market. Now this is it. This is third spot, this is last leg of the market. Notice that the last leg, the market when it moved, it didn't get up to this point. So the strategy is valid. This is highest you got to. You can also use your simply get this just use your RSI or stochastic. I wouldn't use that in this analysis, but you can use that to just identify overbought and oversold regions if you want to. So this is the point one. I can look at a chart and I can know that that is in RSI. This is the second leg. You know this 4 hours candle now. It encompasses mainly this 14th of July and this is 24th of July is about 2 weeks. Understand this candle form. So see that it's a healthy trend when you spot it this way with multiple candles. But are you using a line chart? Now this is point two. Now the point three now look at where we should be. This should be our trigger, which is this remember our trigger is once it goes below this point two, which is here. This is point two, yeah. You can see what happened. Now this point two, this market when the market started forming this coming down after point three, after being rejected at this point, not getting up to this point, you know that yeah, that's started forming out. Now you can see the market came down to this point, closed out here, below it, and went back inside again. That's what happened there. So that's why I said if you're going to be scalping, this might take you. This takes some. Let me check out let me pick up this tool now. Let's take this vertical separator. This occurred here. Let's look down here. That's the breaking out. Then this is the entry part. So this occurred between Thursday 27th July and 28th until one day. You can see the market has broken out and entered back inside. So at this point, market starts coming down. Assuming you do not, you didn't get this, you didn't come here, you didn't notice this chart on time, and this happened. You would have still waited for it to break here. This is another break again. You can see the second break. This break failed. That's why when you're entering the market, this is slippery. You have to enter this a low lot and give room. So your lot, your stop loss shouldn't be tight. So let's look at it now. I don't know how many pips you get from this point to this point. This is about 90 something pips. You can see that. So if you had a short stop loss, you'll be stopped out. But if you have at least 100 pips stop loss and using a minimal lot size, knowing that you're going to look at you're looking at riding this happened under one day, so you're looking at riding this trend for weeks, 1 week and above. So you shouldn't be in a hurry to make all the money immediately. So no lots and more than enough stop loss will help you ride through. But 100 pips should be your stop loss guide. If it goes against 100 pips, you know the trend has reversed back. So that's the sure thing. So just use 100 pips for your stop loss. Now, If you hit 100 pips for your stop loss, you see that this market did not hit you out. You're still in the market. It comes back. This is a point again. It breaks out. So you can as well take a position here again. Understand? Since the market is now clearly below it, maybe it gets to this point, which is below. It's a low below the previous low. So you can take a point, a position here. You sell again, second position after taking this first position because that's clearly broken below that. So you can see if you enter from here now, you can see that we've been riding. The market has been choppy. You can see what's happening, but it has never gone back into this line again. So if you ride from there, let's see, you enter from that point up to this point, you have made at least 196. This is the lowest so far. The market has went to 196, and that took around from the 1st of August till about 29th of August. So the market is still going to go down. It's still going down, down, down. So we've been riding this trend for almost a month now, and it has been choppy, choppy, choppy. So this choppiness you're seeing here now, the lower time frame, which is 15-minute time frame, takes care of this. So you can buy, sell, buy, sell, buy, sell around the year. But this trend entered here is your long-term trend. Okay, that is spot one. Let's switch to and spot another one, previous one. You can see in this case the market tried to make a high here. You stand to see high. This is a point one to this value. Didn't work out on this high. So that's if you just practice it more and more, you get to find out more. I don't make this video too lengthy. Let's end it here so that you practice what I know. Just understand the concept from what I did here. Understand the concept here. You can use this on your own spare time. You can check it out, and this is what I did here. This is what I just did. This is just the concept behind this chart pattern. Okay. The concept behind it is a trading system. Just understand this concept. Once you understand this concept, you look for it using any of the candle chart pattern you want. You know, this candle line, whatever is okay by you, can use that. And also spot easily on 15 minutes or 30 minutes time frame. But when you spot it on a lower time frame, just so that you want to just be scalping. Okay, that'll be all for now. Thanks.